Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. So we're going to take a look at these are some of the top percentage gainers, some of the hottest stocks of the day. The Bitcoin stocks, it did start off really strong today and then they pulled back. There was a lot of consolidation on a lot of those stocks today. So I will be making a video later this evening to cover the stocks in the Bitcoin and blockchain sector. But first up, we're going to take a look at stocks that finished strong today with some nice percentage gains, like BAA. You can see here it closed up 98%, so that was a super sweet move. Congrats, everyone. You got RSI now at 49 and Fasto at 52, so you want to see both of those stay above 50. You want to see RSI get above 50. That'd be a signal the chart is really heating up. You have a bullish crossover here on plus DI with the green line crossing the red line to the upside, so that's a signal the bulls are heating up. Now what happened, this was the nice bounce after it bounced on Friday, so you can see a white candle formed on Friday, and there was a close just above the pink line, above the EMA4 resistance, currently at 16 cents, up here at 16. And then today the close was above EMA's 4, 8, 13 and the bottom of the gap, so that was a huge close, and also just right above the middle Bollinger Band. That's the dotted purple line. So it was a very strong close above a bunch of key resistance levels. Now it is trading higher, and after hours trading, I believe it's around 28 cents right now. So if it opens 28 cents or lower, it could still have a gap up open from 23, but not have an unfilled space on the chart. So that would be good. Now it does need to run up to 30 cents here to hit the top of the gap and fill the gap. And as you can see, the 50-day simple moving average is just above at 31. So those are the two key levels to break, above 30 and 31. If they can get above 30 and 31, then it could possibly run up to the 100-day simple moving average. Now, if the share price drops below that middle Bollinger Band, that'll be a signal that it's still consolidating. It has to stay above that level to get a new uptrend going. Notice there was a PSAR bull flip. The green dots are now below the candles. There was a giant volume spike today. A bullish crossover started on Friday on the 8, 13, and 5, and then the 12, 26, and 9 MACD is pinched. You want to see that crossover if you are a bull. Okay, let's look at CERC. Very nice move today. Closed up 40%. Now it's got RSI back above 80. There was an upper wick on today's candle. It lowered Fasto, so it's down here in 57. A big spike on plus DI with a bullish crossover. Notice how the green line crossed over the black line to the upside. So this has been these annotations are from the last time I made this chart, and that was quite some time ago. The share price has been cruising higher. It's in a very strong uptrend. I know there's a lot of lines in the chart, but you can see here that there was a break above the middle Bollinger Band back here in August, and it started this uptrend. Broke above the 200-day simple moving average. It was riding above the 50 and the 100-day simple moving averages. And this red line here, this is the top of the channel. It came down, hit the bottom of the channel, and then as you can see here, it's back up at the top of this current channel, and at the same time, it's also hitting the top of this previous channel. So notice there's a top here, a top here. If you line that up, it's right at the exact same point. So this is a crucial resistance level. If it can break above, that's going to be very bullish, and it could head higher. Now you've got some resistance here at 2 where there was a prior gap that got filled, and then the next big level is going to be the bottom of this gap. Okay, so that's up here around 270 or so. You can see there's a gap from back here in December, and so the bottom of the gap is 270. That's going to be the next big target if it can get above this key resistance zone. It's at the top of 2 channels right now. So if the share price does pull back, then you want to see that 300-day simple moving average, the blue line currently at 139 hold. As long as candles stay above that level, that's going to be a signal that this uptrend is still intact. There was a big volume spike today. If it can close above that 170, 180 level, that will signal more upside potential. So yeah, so DCIX is back in play. We've got it had a nice move today, so it's back in play. It closed up 32%. So congrats, everyone. Needs to get back above 50 on RSI. Notice there was a bullish crossover down here on Fasto. It's still at oversold levels. It needs to get above 20. you know, that would be a bullish signal. The chart's heating back up. So what happened was it's been bouncing off of the 50-day simple moving average that's currently at 620. That's this green line right here. Notice how it bounced off of it on the 14th, 15th, and 16th. It was holding that level, you know, and then it had the gap up open, it pulled back, and then it came right back down to that level again, and now it's bounced twice off of the 50-day simple moving average, and today's candle closed above the middle Bollinger Band. Notice how there's no upper wick on today's candle. It closed at high of day. That's a very strong close, signaling the bulls were clearly in control. Now, in order for this to still be a good play, it has to stay above that 50-day simple moving average. You know, it would be a smart level to, you know, you do not want to see it drop below that. Really, you know, the tight level that you don't want to see drop below now is the middle Bollinger Band, currently at 841. You know, that would be a good level to have a tight stop. If it drops below the middle Bollinger Band, you know, it could continue to consolidate. Now, if it drops below that 50-day simple moving average, that's when it could be the big red flag, because there's an unfilled gap below between the high of day on this candle and low of day on this candle. And so, you know, a drop way down to this bottom of this second horizontal support line would fill the gap. So that would be a big drop from the current level. So it really needs to stay above that middle Bollinger Band to be a good play. You know, the retrace would be back up to the middle Bollinger Band, currently at 1690, and then the closing price here on November 6th. Those are the two big levels of break. If it can get above those levels, then there's a gap to fill above. Notice there's a gap between, there's two gaps lined up from back here in August, and so we'll be talking about those gaps being filled if the share price can stay above the middle Bollinger Band and get a run going back up to that upper Bollinger Band. So first things first, this is a nice start. Let's see if it can get a multi-day run going. Yeah, so keep an eye on DCIX. As you can see here, we were watching the 15-minute chart to try to time the entry. And as you can see, it had been in this big downtrend. Notice that, you know, that when the candles were below the middle Bollinger Band here, it was just signaling downside risk. So for multiple days, it was dropping, and then finally today it found support. What we were looking for was a break above this dotted purple line, the middle Bollinger Band, and then this green line, the 50 simple moving average, currently at 706. So when this candle happened right here at 2:30, it put it in play. You know, we got alerts out here when it was breaking this 100 simple moving average. You know, it was really starting to heat up. It was hitting the 200 and 100 simple moving average resistance zones here on the 15-minute chart, and then finally it broke above that level on this candle. So the second to last candle of the day, and then you had the big close above the 300 simple moving average. So now the big level to hold is that blue line. If it could stay above 871, then that's going to signal that it wants to head higher. If it drops below, then that would signal consolidation. It really needs to stay above for it to be a good play with this setup. You have to be careful with these shipping stocks. And so the next big target would be this just a little bit above 11 here on the November 20th high close at about you know, 11:15, 11:20. And then if it can get above that, you know, then you're talking about a run back up to the November 17th high close, which is up here near 1550. So yeah, so keep an eye on DCIX. Notice the volume. So notice how the big volume came in and started pushing it up. Notice how there was really light volume before the move. So this has all the classic, you know, setup. It just has to follow through with the multi-day run. We'll see if that can happen tomorrow. Okay, NOG closed up 21%. Now it's above 70 on RSI. Fasto is about ready to hit 80 there. You've got a bullish crossover on ADX. So the charts, you know, it has a really nice uptrend going. It broke above the middle Bollinger Band here on this dotted purple line, and then it got above the 50-day simple moving average. You know, broke above the 100-day simple moving average. So it's above very key levels. It's holding the purple line here, the dotted purple line, which is the middle Bollinger Band at 111. As long as it stays above that level, the uptrend's intact. You know, the one red flag on the chart here is there is a gap between high of day on Friday and low of day today. So a drop down there to EMA 8 at 123 would fill that gap. So that is the downside risk. If it's currently hitting the next key resistance level, which is the red line, that's the 200-day simple moving average at 160, it has to get above that level to head higher. If it fails to break that level, you could see it pull back and fill that gap. It wouldn't signal the chart's broken or anything like that. It would just signal consolidation. Many times, this is a multi-day run with the big climax spike here, looking like a climax volume spike here. Many times hitting the 200-day simple moving average would signal a top, temporary top, and the candles could work back. Once it breaks above, like it did back here on November 6th, that's going to signal more upside potential. And it could happen tomorrow. If it gets above 160 tomorrow, then the next target's going to be the 300-day simple moving average at 196. So above 160 equals 196 possibly. Fail to break 160, and you could see a drop down to the 120s. So really nice volume spike. There was a big P-star bull flip. You have to watch out that could be the climax spike, but you have this nice crossover on MACD here, so it's signaling like it wants to make that next push higher. Okay, so let's look at OPHC. Okay, so yeah, this stock closed up 32% today. It has Fasto, is just at 52, so it just broke in the 50 zone, so it has juice in the tank. RSI is hitting 68. The last time it ran well above 90. The green line needs to cross back above the black line. You want to see plus DI above the 80x. So it's formed a flagpole. Notice that you have a large white candle that formed here, and then notice the candles forming off of it. They form what looks similar to a flag. And so what needs to happen here is a break above the high close, which was the closing price here on the the 16th of November. And so it did close just above that level today. So even though it was slightly above, that still is the green light. It's signaling more upside potential. It has to stay above that level. If it fails to break that level and that turns into resistance, that could signal a temporary top and it could pull back. It's been holding EMAs 4 and 8. As long as this 6 support levels holding, this uptrend's super strong. The risk is if it breaks, you could see a drop down here to this middle Bollinger Band down at 368 and the 300-day simple moving average at 329. So it could be a healthy drop if you see a close below EMA 8. So keep that in mind. The uptrend would still be intact. It's just most people don't like to hold for the pullbacks on these penny stocks. So if it can stay above this closing price here, if you see it 830 or above, then the next target's going to be the high of day here around 975, close to $10, and then a break above 10, and then it could possibly run back up there to 14. So keep an eye on OPHC. If you look here at the 15-minute chart, you can see it's worked its way back to the high close from the 20th. So that's going to be the big level to break, this 880 close. All right, so this is almost filled the jar back to that level, and so it's completing the cycle. It peaked on the 20th, it pulled back for a couple days. Now it's taken a couple days to work itself right back up to 880, and now it all comes down to this crucial level. Is it going to form a double top? Or that's one outcome, and then it could possibly consolidate and pull back, or it could close above, and that would signal it wants to break out higher. So if you start seeing candles forming above 880 on the 15-minute chart, that's going to signal it wants to head higher. Then you've got the high up here around 980 is the next target. If it fails to break that 880, you could see it consolidate. As long as this middle Bollinger Band at 778 is holding the dotted purple line, this uptrend's really strong. If it drops below, then you could possibly see the moving averages below get tested, the 50 and the 100. Notice how the 50 crossed over the 100. That's a signal the chart is building strength. So yeah, so keep an eye on OPHC. And then we have, for the last video of stock in this video, is MTBC. Closed up 18% today. You have RSI and Fasto both back in the bull zone. You have a bullish crossover on 80X. It had a nice move today. It just formed the black candle. So it had some profit taking, possibly a little dilution on the move. The red flag is there is an unfilled gap between high of day on Friday and low of day today. It's always better if they just fill the gap, because the gaps, especially with the penny stocks trading under $7, it gives them a target to pull the share price back to in the future. It came close to filling it. That could be good enough. We'll see if the market makers are satisfied with that. The middle Bollinger Band is at 281. That's the dotted purple line. That level needs to hold. If that level holds, and then notice how it's been holding the 260, the 50-day simple moving average for multiple days. As long as this 260 to 280 support level is holding, it signals more upside potential. It's just been taking a while to get moving. Today looks looks like it's the day it wants to push higher. You know, like it wants to get this new uptrend going. You know, the break above that middle Bollinger Band. Now, what it needs to do is it has to close above the closing price here on November 2nd. That is the huge resistance level to break. If it fails to break that level, that would signal a temporary top. So it's this white candle here, big level, about 410 or so. So if it holds 280, 410 is the next target. Notice that it would have to get, you know, through the upper Bollinger Band at 380 and then 410. And if it closes above that 410, that's when you're talking about the fives again, you know, possible run back up to this high. And so, yeah, keep an eye on it. You know, there was the volume spike. Look at MACD on the 12, 26, and 9. It's just starting a bullish crossover. So, you know, the bullish crossover many times signals the start of a new uptrend. And so we'll see if that's the case here. One already started on the 8, 13, and 5 MACD. Now for the last chart is the weekly chart for MTBC, and I just wanted to show this so you can see like where it's headed. And so notice that it started trading back here in 2014, and then it went all the way down and made a bottom down here this year, down in April. And then it's been working its way back higher. You know, it did fill the jar back up to 5. Notice how the upper wick here back in October, the first week of October, filled the jar. So it's working its way back to that level. Notice how the candles are heading back. So it looks like it's heading back to 5. That's the eventual target if the uptrend continues. It needs to hold this middle Bollinger Band down here at 211. As long as that holds, the uptrend's intact. You know, it's currently holding the EMAs. You know, it needs to break above the closing price here on the second week of October. That would be the next key level. And then you have the closing price on the last week of October. So yeah, so it's got a nice upturn going. We're going to see if it can make its way back to 5. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.